All right, welcome back to the podcast, everyone. Today we are diving deep into the latest earnings report from Steel Authority of India Limited, or SAIL as it's commonly known. Buckle up because we have got a lot to unpack from their Q3 and 9-month financial performance for fiscal year 25.
Absolutely. SAIL, as many of our listeners probably know, is one of India's largest steel producers. They handle everything from mining to manufacturing, a wide range of steel products. They are, I guess, a pretty big player in the Indian economy.
Right, so let's jump right into the numbers. For the 9 months ending in FY25, SAIL reported a turnover of 72,595 crore rupees and revenue from operations of 73,162 crore rupees. Net worth is sitting pretty at 54,623 crore rupees. How do these figures stack up against, well, what analysts were expecting?
Well, actually, the report mentions an EPS of 2.35 rupees. Their EBITDA came in at 7,983 crore rupees, resulting in an EBITDA margin of about 11%. Looking at profitability, they have got a PBT of 1,445 crore rupees and a PAT of 970 crore rupees. These are decent numbers, but we need to see how these compare year on year to really gauge performance.
Okay, so digging a bit deeper into the income statement, were there any one-time events that skewed these numbers? Anything that might have given them a little boost, or maybe something that dragged them down?
Good question. Nothing jumps out immediately as a major one-off. The financial performance section compares 9M FY24 with 9M FY25, showing an EBITDA decrease from 8,451 crore rupees to 7,983 crore rupees. PBT also dropped from 2,359 crore rupees to 1,445 crore rupees, and PAT fell from 1,722 crore rupees to 970 crore rupees. Volume mix and raw material costs had some impacts.
Okay, a bit of a dip then. So, how are they managing their debt? What does the balance sheet look like in terms of assets, liabilities, and equity?
Right. So, sales debt as per INDAS stands at 39,387 crore rupees. The debt to equity ratio is 0.72. The report highlights a DSCR of 3.14 and an interest coverage ratio of 1.63, which indicates they can comfortably cover their debt obligations, at least for now. I mean, these ratios are pretty important indicators of financial health.
So, they are managing their debt, which is a plus. What about cash flow? Are they generating enough to keep things running smoothly, invest in growth, and maybe even reward shareholders with dividends? Speaking of, any dividend news?
Good point about dividends. Unfortunately, this presentation doesn't mention any specific dividend declarations. That said, they do have enough cash flow to sustain operations, but expansion might depend on market conditions and strategic decisions.
Okay, so no juicy dividend news this time, but fingers crossed for the future. Now, SAIL is pretty big and their operations are diverse. Can we break down their performance by different segments or geographic regions? Is there a star performer in the mix?
Well, the segment reporting does break down revenue and results by plant, like Bhilai, Durgapur, Rourkela, and Bokaro steel plants. Bhilai steel plant, for instance, had a segment revenue of 7,827.61 crore rupees in Q3 FY25. But yeah, no specific mention of dividend policies differing by segment.
Interesting. Let's talk ratios. What key financial ratios can we calculate to get a clearer picture of sales performance? And how do they stack up against historical data and industry benchmarks?
Okay, so in terms of key ratios, their debt to equity ratio is 0.72, as we said. The compliance report under Regulation 52, Space 4 of SEBI, lists several important metrics like the debt service coverage ratio, which is 3.14, and the interest service coverage ratio at 1.63. The operating margin is around 10.91% for the 9 months ended December 2024. Well, these numbers are definitely something to keep in mind.
So, what trends are we seeing over the recent quarters and years? Is SAIL growing, shrinking, or staying about the same?
Good question. Well, looking at crude steel production, for instance, we see a slight dip in Q3 FY25 compared to Q3 FY24. The production went from 4.75 million tons to 4.63 million tons. Yeah, we are seeing fluctuations rather than consistent growth, actually.
Got it. Now let's peek into the crystal ball. What's the outlook for sales future performance? What are the potential catalysts and risks on the horizon?
Right. Well, the presentation touches on global and domestic economic scenarios. The IMF projects a global growth of 3.2% in 2024 and 2025. India is expected to remain one of the fastest growing major economies, with projections around 6.5% to 6.7%. SAIL has also signed MOUs for lower carbon steelmaking, which shows they are thinking about future sustainability. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Sustainability, always a good look. So, bringing it all together, what's your final verdict on SAIL? Is it a buy, sell, or hold?
Well, SAIL faces challenges from declining steel prices and cheap imports, but they are also taking steps towards modernization and sustainability. I'd say for now, it's more of a hold with a watchful eye, considering the external economic factors and how SAIL adapts to them. Before we go any further, why don't you hit that like and subscribe button down below if you're enjoying this episode so far?
And that wraps up our deep dive into SAIL's earnings report. Thank you for that fantastic analysis. This has been super informative.
My pleasure. One thing that is also worth highlighting is SAIL's commitment to sustainable operations. They are applying the 4 Rs: reduce, reuse, recycle, and recover in their waste management. So this is like adapting a recipe when you're missing key ingredients. They're finding innovative ways to manage resources.
Right. It is great to see that they are thinking long term. I know that they also seem to be partnering with research institutes for eco restoration and decarbonization projects, which is pretty cool, right?
Absolutely. I mean, they have got MOUs with BHP and John Cockerell for lower carbon steelmaking, and they are even exploring hydrogen-based direct reduction iron making, which is really forward-thinking.
Now, how are they doing in water and energy conservation?
So they are aiming for zero liquid discharge and are working on treating and recycling wastewater. Also, they have commissioned solar power units and have hydel power plants under implementation. It's a holistic approach to sustainability.
And they are also contributing to society, right? I saw something about CSR activities.
Yeah, they are. They are focusing on education, healthcare, livelihood generation, and women empowerment. They have spent around 645 crore rupees on CSR since FY15. It's like they're building stronger communities along with stronger steel.
It sounds like they are investing a lot in education, which is always great to see.
Absolutely. They are supporting almost 50,000 students across 96 schools. They're also running sports academies and integrated development centers. So they have got a wide range of initiatives.
It seems like SAIL is really trying to be a responsible corporate citizen, balancing economic growth with social and environmental stewardship.
Exactly. It is not just about profits, it is about people and the planet too. It is like they're building a legacy that goes beyond steel.
Now, how did the global economic conditions affect SAIL?
Well, the report mentions that global steel production declined by 0.9% during CY24. China still dominates production, but has seen a slight decrease. India, on the other hand, registered positive growth.
So, India is bucking the trend of it?
Yes, but the World Steel Association expects global steel demand to decrease slightly in 2024 before growing in 2025. India is projected to have the highest demand growth among major steel-consuming nations. The global scenario definitely has an impact, but India seems to be holding its own.
How does this compare to the domestic scenario? What's happening in India specifically?
India's GDP growth is estimated at 6.4% for FY25, which is lower than earlier projections. However, India is still expected to be among the fastest growing major economies. The World Bank and IMF project growth around 6.5% to 6.7% for the coming years.
So, the Indian economy is still growing, but maybe not as rapidly as previously hoped. How is that affecting the steel industry?
Right, the steel demand in India is projected to increase by 8.5% in CY 2025. Finished steel consumption and crude steel production have both seen increases, so there's definitely a positive trend domestically.
Got it. So while there are global headwinds, the domestic market is providing some tailwinds for SAIL and other Indian steel producers.
Precisely. It is like navigating a ship through stormy seas. You have got to adjust your sails to catch the favorable winds when they come.
Shifting gears slightly, let's talk about some of the finer details in the financial statements. I noticed a few notes about ongoing legal matters and disputes. Can you shed some light on those?
Yes, there's a note about entry tax where the constitutional validity has been upheld, but the specific liabilities are still pending resolution in various courts. There's also the dispute with Damodar Valley Corporation regarding electricity charges, which is still under litigation. These contingent liabilities could have an impact down the line.
So, these are potential risks that investors should be aware of, right?
Absolutely. It's always important to consider these factors when assessing a company's financial health, particularly when it comes to potential liabilities.
Now, let's switch gears slightly and talk about the company's leadership and governance. I noticed something about the independent directors in the audit report. What's the story there?
Right. The report mentions that the tenure of some independent directors has expired, and there is a need to induct a woman director. This means the composition of the board and its subcommittees might not be fully compliant with the Companies Act and SEBI regulations. And
that could raise some concerns about corporate governance, right? Is this something investors should pay close attention to?
yes, it's important because it affects the balance of power and oversight within the company. A well-composed board ensures better decision-making and protects shareholder interests. So this is something to monitor closely.
And finally, wrapping up, what are the key takeaways for investors from this earnings report? What should they be focusing on?
Investors should focus on sales efforts to improve efficiency, manage costs, and invest in sustainable technologies. They should also keep an eye on the resolution of legal disputes and the company's corporate governance practices. Finally, monitoring the global and domestic economic conditions and their impact on steel demand is essential.